Is your 401k really working for you? How do you get the most out of it? And is it the right choice? I'm Tracy Capelman. Join me right now for your Wealth Health. Hello and welcome to your Wealth Health, a show focused on helping you manage your money. I'm your host, Tracy Capelman, and I am here once again with the founder and CEO of Hilltop Wealth Solutions, Eric Brenner. Now, the next 2 weeks, we're going to talk about 401ks and Roth IRAs. These are retirement accounts that many of you have, but you might not know as much as you would like about them. Our goal is to make sure you know what you need to know about these important retirement accounts. And this week, we're discussing 401ks. Eric, what exactly is a 401k and what are the advantages?
Yeah, so a 401k is a retirement savings instrument or vehicle that one can use. And, you know, they really became popular, started in early 1980, at the beginning of 1980. And Tracy, now there's more than $4 trillion with a T in 401ks. And so it's a way for someone to save money for their retirement, for their future. And one of the main reasons this has come about is because over the last 20, 25 years, we really have seen a lot more companies reduce or eliminate pensions. And they now have offered 401ks, and maybe there's a matching program. So we're more as an employee, we're more responsible for ourselves than ever. And pensions have pretty much gone by the wayside, or very few have pensions. Most people have an option of saving in retirement, and the 401k is one option.
Eric, are there disadvantages to having a 401k?
Yeah, so advantages, disadvantages. You know, advantages are tax benefits. You have control. It's easy payroll deduction. Oftentimes you get matching contributions. So, you know, you do have advantages with that. It's an easy thing. You set it up. It's kind of the set it, forget it. And we always encourage people to at least every year take a look at what they're saving and maybe increase that a little bit. I would say a goal for somebody would be to get to a 10% of their total income. That would be a goal for someone to get to at least 10% of their total income. So if they're making $80,000 a year, at least save your own money at $8,000. The disadvantages, Tracy, are their taxes when you withdraw them. If they're pre-tax 401ks, you contribute no matter what happens to the market, which can be a good thing because it really buys buys on the low side. Investment choices are limited, and it's not easily accessible prior to 59 and a half or retirement.
Eric, so I'm sure a lot of our viewers have heard that there may be a pre-tax 401k option and a Roth 401k option. Talk a little bit about the differences.
Yeah, so a pre-tax option is what originally came out. So that's what came out back in the 1980s. And so basically what happens is if you put $1,000 into the 401k and your taxable income falls in the 22% bracket, okay, you're saving $220 on federal taxes. And so that's a good thing. And it tax defers, okay, and then you're forced to take it out at that age 72 or beyond. So that's a pre-tax option. What has come about over the last several years is Roth IRAs. And so Roth IRAs are after tax. So you don't get to deduct that contribution immediately, but the earnings are tax deferred. And when you take it out, it's tax free. And so what we have seen, I mentioned that $4 trillion, almost all of that money is pre-tax. So if you think about it, 4 trillion, a little under that, about 3.5 trillion, that has yet to be taxed. And so what has changed over the course of the years is now more and more people have Roth 401k options, Tracy. And so we really encourage people to think about maybe splitting that contribution, pre-tax and Roth. 401k if they have that option, because I'll tell you, tax-free is never a bad thing. If someone doesn't have to pay taxes, it's always a good thing. And it's often called that retirement tax bomb. If it's pre-tax, eventually you're going to have to pay taxes on it.
So finding a balance between the two, that's some good advice that I hadn't heard. Eric, are there limitations on the amount, I guess, that people can contribute to 401ks? And do those limits change as you get closer to retirement age?
Yeah, there are limitations on how much you can put in. So an individual this year can put in $19,500, and that's annually. And then if they are over 50, they give us over 50 a little bit of a bonus opportunity. They can put in an additional $6,500. Now, Tracy, what that does not include any match. So we don't have to worry about any match. I mean, that's above and beyond what someone's allowed to contribute in there. And as I stated earlier, I often get asked, how much should I save? How much should I save? And, we always say that you should at least save 10%, maybe target 15% of your income. So oftentimes people can max out in these 401ks. Now, one thing that's important to understand, Tracy, is that total contribution cannot be over that 19.5, and if you add in the 6,500 for both the pre-tax and the Roth options, it's got, you can do half and half or split it however you want to do it, but you can't be over that contribution limit.
Now, Fidelity says the average 401k has increased 7% this past year. Do you expect that trend to continue?
I do expect it to continue. It's first off, more and more companies now are offering 401ks, and in fact, a lot of small employers that really couldn't afford to offer a 401k in years past. Now it's become really affordable for small companies to offer. Offering a 401k with a match is a great thing for an employer because it's a competitive advantage, and we continue to see people wanting to save money. And with this Roth option that's been added, and it doesn't cost to run that plan, doesn't cost any more, Tracy. So, we do think that 401ks and contributions and participation in 401ks is going to continue to increase because there are very few companies that offer pensions now. So people are going to be more responsible for their financial future more now than ever, really.
And if someone has a 401k now and they have a Roth 401k option, what do you recommend when it comes to investing in the pre-tax over the Roth option?
Yeah, so I talked about it a couple of minutes ago, but yeah, to go into a little bit more detail, we do suggest that you at least split it. And oftentimes now, depending on the situation, we're saying a 50-50, so 50% in pre-tax, 50% into Roth. However, sometimes we're even sliding that more to the Roth option because, again, tax-free is good. And oftentimes, what we see when people get into retirement is they think they're going to be in a lower tax rate. Or tax bracket, but oftentimes that's not the case. They're actually in as high a tax bracket, if not higher. So we often, we do want people to look at that. And one of the things I want people to realize is we see a lot of companies that come out with the Roth 401k option. Somebody's participating in that pre-tax option, and they really don't look at it and make the shift. So they need to look at that and just, try to get some balance in their savings plan.
Now, Eric, I have a couple of other questions I want to ask about 401ks, but first, this really seems like another area where people could use advice from a good fiduciary advisor like yourself and all the advisors at Hilltop. Explain what a fiduciary advisor is, and then I understand you have an offer for our viewers.
Yeah, so a fiduciary advisor is simply we're fully independent fiduciary registered with the Securities and Exchange Commission. And so we must always act in the best interests of our clients. It's by law. We don't sell products, so we don't work on commissions. And so we just really think it's important to have someone that is on your side that's not trying to sway based on a product or making a commission. So we just think that's really important to have somebody that is on your side here to make sure you put together a good plan. And then we do have and want to offer up a complimentary retirement roadmap review. And that roadmap review is going to cover things like, are you saving enough and in the right places? A forward-looking tax plan, looking to forward and determining what your tax is going to look like. And investment analysis, how much risk are you taking now? And then a legacy plan. So we'll take a look at those components and really, with no obligation, put together some thoughts and come back with some recommendations that may just help your situation. So we encourage people to take advantage of that.
Absolutely. Now, Eric, just a couple more questions about 401ks. Are they right for everybody? So many of us have them, or are there better alternatives for certain people?
Yeah, I'm not going to say they're right for everybody. It really does come down to the situation, and maybe they're not right for everybody. Maybe they have other investments outside of 401ks. Maybe they have real estate. So they really need to take a look at their situation and weigh it out. What I will say is that it is a good kind of forced savings. So if you're somebody that has, just wants to make sure you're saving and you're putting away, 401ks become a really good option for that.
What can people do with their 401ks, and what should people be looking out for?
Yeah, so what they can do is, they do have limited options typically inside the 401k. But when they leave an employer, they would have the opportunity to roll it over to an IRA. And in an IRA, then they would have more options, more flexibility. And they can do an actual tax-free exchange for that, so it's not taxable at that time. So that's an option as well. The other piece of it is when they get to retirement, they really need to determine, is the 401k structure still appropriate for them, or do they move it to an IRA? And I know in future shows we'll talk about this more. So, those are some of the options that they have, and they just want to make sure that it's best for them, and understanding the consequences that could happen down the road on that 401k or IRA.
Excellent information, Eric. Well, hopefully we've helped some people with that. I can't imagine that we haven't. Next week, we're going to talk, as Eric said, about Roth IRAs and the pros and cons of having one of those. And we're also going to discuss why now's the time to make a decision about getting a Roth. Can you briefly explain why now is the right time to consider one, Eric?
It's tax-free. It's two words, Tracy, tax-free. Roth IRAs, I don't think are going away. They've now made it in the tax code. They've made it available in 401ks, as I've mentioned. And we're seeing now sizable Roth 401ks on people that have had them now for several years. And they are a great thing to have tax-free income in retirement.
All right, so make sure you watch next week to find out more about Roth IRAs. We are out of time for this edition of Your Wealth Health. For Eric Brenner and the entire Hilltop staff, I'm Tracy Capelman. Thanks for watching, and stay wealthy, everyone. We hope you found this discussion helpful today. Don't forget to like and subscribe to our channel for new content weekly.